I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. Thank you for listening or watching. Today, I have Scott Griffin. Thank you so much for being here.
Oh, it's great to be here, Rick. Thanks so much.
Yeah, and you're in the lending business. So can you tell us, first of all, how'd you get into it? Like, what? There's so many different ways to get into real estate. So what made you go this route?
Oh, gosh, her name is Peaches, and it was an elevator ride in Woodland Hills. You know what it was? It's so fun. It was my first house. I was refinancing it to pull cash out, and I went to Chase Bank. We're going in the late 90s, and Chase Bank sends me out of their bank with a folder, really pretty looking folder, and it was 5 pages, legal size documents, fill in the blank. I got to tell you, I was so overwhelmed as a consumer looking at this loan application and trying to figure out what are the answers to all of these questions. There are so many questions they're asking on there. It was so overwhelming. I didn't even know if it was going to be worth going through the effort. And then comes Peaches, the elevator opens. She comes in and she sees my folder and she asked me what I was doing. She reminded me she did loans and she said she would help me. And guess what? They're loaning their cash out, and on the journey, she goes, Scott, I think you'd be amazing at mortgages. I'm opening up my own office. I'd love you to come. I'll teach you everything. And they were selling the building I was managing. And I thought, well, this is a path to stay in the City of Angels. And that was 1997.
Wow.
Never look back.
Nice. And now you have your own mortgage brokerage, right?
Since 2003.
Since 2003. Okay. So you've seen a lot.
Well, you know, there's a lot to see. And this is the City of Angels. And I love that you highlight the magic that lives in our community, because it really is a lot to see. I think every community has something that makes it so different than all the others. What I love about ours, well, I think this is the city that entrepreneurs bring their dreams to. They bring their dreams because this is where dreams really get to happen. And is what I love about LA is Hollywood. I think the more imagination and creativity you're willing to live in, the more the city rewards you. You know, I don't know anywhere that quite does it like ours.
You know, it's funny. When I first moved here in 2010, I was working with a developer, and I was like out running errands, picking up materials, whatever. And I hear on the radio, it's like, we're like the largest dealership in the country. And I'm like, that's BS. That's such a huge claim. And then I remember, like, shit, we're in Los Angeles. Why wouldn't it be? Why couldn't it be the biggest?
Was that me fun?
I think so. I think it was. But it's like, then I realized like LA has so many resources. I remember when I was getting health insurance, they were like, hey, by the way, I was at the time, my family had moved up near Sacramento, and they're like, actually, your health insurance is cheaper in LA than it was in Sacramento. I was like, why? And they're like, because of the resources. And I was like, makes total sense.
A lot of sense.
Right? So it's like, and LA has the tennis courts, the hiking. You don't actually, it's LA, what I've told people is like, look, LA's expensive. There's no doubt about it. But there's so much free and low cost things you could do. Like you could go to Santa Monica on the beach and just grab a cup of coffee. Yeah, it might be $10 for the coffee. Yeah, maybe it might be $10, for parking. But it's like, it's also just a cup of coffee and you're at the beach. You go to the Midwest, you can't do that.
You really can't. And look at what you just invited. You just made a whole day awesome, and it was only $20 to do it.
Yeah.
That's the cost of a movie ticket.
Oh, yeah.
You sent me to the beach, and you sent me to not just a beach. You said I could go to Santa Monica.
Right?
That coffee. You know what I love? You never know who you get to meet.
Yeah. No, I've been privileged, I should say, to meet some incredible people over the years. And I mean, I'm talking about, I have clients where they came from Section 8 housing, and I just helped him buy his third property here in LA as like investment properties.
Wow.
Yeah. And it's just like, and I asked him once, I was like, it's very common for people in certain economic situations to stay there.
Yes.
Why are you different? And he's like, I just didn't like being poor. And I was like, I mean, I guess as good a reason as any. Right? It's just like, there's so much opportunity out there, and there's so much more you can do that you don't need to let things hold you back.
Not at all. And it's amazing what happens when you're the landlord collecting the rent.
Right?
It really is a great way to develop wealth. It works, especially Los Angeles's rent.
Right. I'm hoping to actually bring on some economists over time. What a lot of people don't realize is with the rent control laws, it actually makes it worse for tenants because it keeps inventory low. Because if someone's paying grossly below market rents, they're not moving. So people who are moving into LA, people who are upsizing, that inventory that should be there isn't.
Very much so. Very much. Yeah. What a great point to highlight, Rick.
My last vacancy was a few months ago, and about a week was my vacancy. She moved in 3 days after the paint was done.
Wow.
Yeah. So it's like
turnaround times. What I mean by it's fun to play landlord in LA.
Right.
And really works.
Yeah. So let's kind of jump into that. So let's talk about what some of your clients have been doing in LA from a lending perspective. I've had the opportunity to interview other lenders, and everyone has a different perspective. So it might be good to get yours and what you're seeing right now.
Well, I love the question. And you know what I love too? Time stamping the moment we're meeting each other today. It's early 2025. And it's so interesting. What's interesting is that there's solutions that have been brought back into industry. The self-employed, I said it earlier, I think we come here to LA to bring our dreams forward. But the self-employed, when we go to buy a home and use somebody else's money and apply for a mortgage, we've been traditionally, since 2008, been relying primarily on government financing. Government financing is very specific. It loves to say yes, but it does it in a specific method. One of those is pay stubs, tax returns, W-2s, is giving the documents to the bank that, well, when you're self-employed, here's what I've learned about tax returns. They just tell the bank how good your CPA was, because by the time you take your qualified deductions, well, there's not much left to what the bank looks at of what they call qualified income. We already know this formula doesn't work for the self-employed. Right. But there really was no other solution as we were healing from the meltdown that took place. And while rates were super, super low, there was no real invitation for private money to return and develop solutions. Well, life often has a pro and a con to things we love and don't love. Here's the gift about higher interest rates. It brought back money, capital, to lending. And lending, having capital access to it, creates solutions to people to get the loans that they qualify to have that don't rely solely on government sponsorship. The secondary market that creates these avenues was what closed in 2007. It reopened about 5 years ago, but has been actively participating at a much higher level in this higher rate environment, and it matters for us for self-employed. It means that we can buy the homes we love to have finally and qualify not using a tax return, because it never worked. Here's what I've learned. Rick, if you're going to ask a self-employed person what they earn, well, look at their bank statement. The deposits made is the income earned. If that's
Right.
the real question, well, we got to look at a better documents. And that's what we're doing in 2025. We're asking better questions, looking at the right documents to answer them, and none of them are a tax return. For LA, it matters. Our
Yeah.
real estate pricing and those that can afford to buy it are not all getting the chance to earn income through a W-2. They
Right.
need something outside of that to finance that 1.3 million home. And so those solutions are what's present. And what's present is a market that's stabilized again, that invited reopening. Why? Because we have laws that most of us don't even know exist. Most of us don't even know what the SAFE Act is. And it's there anyway. And there's solutions that were developed during the recovery that makes this all possible again today to get access to yes, you can. And it matters. And so that's what I'm seeing a lot of, Rick. I'm seeing a lot of self-employed individuals once again reactivating in their own purchase successes. The other people, Rick, that I'm finding really taking action. See, here's the other cool thing about high interest rates. Well, less people are on the playground competing against you. And it was just a minute ago, we weren't buying LA real estate. We were competing, trying to win it. And
Yeah.
most of us could not. Most of us lost. And so it wasn't buying LA's real estate. It was trying to win LA's real estate. When we're in a high rate environment, one of the gifts is that people have, I'm going to wait for rates to lower model, and they step
Right.
out of the platform for a minute. Well, that's your gift. First time home buyers barely had a chance to get a house during quite a bit of the windows we were just a part of together because there was so much more competition with more down payment, more tools that made themselves look more attractive to a seller and the agent that they work with. That's not the same platform today. And wealth development happens uniquely differently, well, through real estate. And you can't build the wealth if you don't own it first. So
Right.
activating in the right now window is a gift. And the gift is we got a chance of actually getting one. Not only getting one, Rick, I've seen sellers able to provide concessions, solutions to the buyer to make accessing their homes really worthwhile. One of the biggest solutions I've seen successfully, Rick, was that I'm seeing renters. I think most of us would much rather be a homeowner than the renter. Cost a lot of money to step into the first one. For most of us, it's easier to make a security deposit payment to rent
Sure.
a space than it was the down payment and closing costs. Well, that was before FHA 100 came to the platform. And that's a government-sponsored opportunity to access your home with no down payment, and the seller can pay all of the closing cost, up to 6% of the purchase price, which means that's you getting the house for how much out of pocket? A lot less than a security deposit. And
Right.
the only thing different is you didn't know about it. That's why I say 2025 and the years moving forward are based on solution-based lending, creating opportunity for those of us that couldn't have it before to get it now. But you can't get it now if you don't go out there and go get it.
So let me ask you this. I'll play devil's advocate. So you have FHA 100, which is 100% financing. Now, typically, and correct me if I'm wrong, because I'm known to be a smartass, not a know-it-all. If you have, when you look at the foreclosure rates, typically FHA is higher, right? Because they usually, they might have a certain history. So now you're saying, look, now you're willing to do 100% financing. Could you make an argument that could be dangerous?
I love that's a gorgeous question. You ready for this? Okay.
I'm ready.
I love computers. You know why? They never forget. It's just raw data. It always knows. And when we run raw data through an algorithm, you can measure things that the raw data tells us. One of the things measured in industry is performance of mortgages paid versus foreclosures. All of that is measured by so many metrics. One of them is type of loan. and the design of the loan. So if I were to ask you, which loan do you think here in America, I'll even just speak on a national level, is the highest performing mortgage? And performing means that we're not going into foreclosures. We make our on-time payments. The highest performing mortgage, is it the 20% down using the Fannie Mae mortgage, the one that most Americans use, the 20% down? Is it our jumbo buyer buying in the millions and putting maybe 30% down? Or is it an FHA borrower with 3.5? Or is it the VA borrower with nothing down? And it's really interesting. Here's what I've learned. It's not the down payment that determines the ability to repay that mortgage, because the best performing mortgage that is tracked in our nation is the VA loan. And the VA loan has something in common with almost all of them. Not all of them, but one of the strongest commonalities is that there are no down payments. So to answer the question of will you pay me back, it's not down payment that answers that. Instead, it's what did you do with the commitments you made yesterday? What are the assets that you have to support tomorrow in case tomorrow changes on you a little bit? What type of business are you in? How long have you worked there? There's a lot of other questions that deserve to be asked to answer the master question of will you pay me back?
Yeah. It's interesting. There was a quote from the CEO of Bigger Pockets. He's a big investment platform. And he always says, like, I actually prefer putting the least amount down because preserving the cash is more important.
Well, and not only is that true, because tomorrow's coming and we don't control everything about tomorrow. And those are the reserves in life that are available so that tomorrow can be dealt with differently. I've discovered it's really challenging to deal with different tomorrows when the money in the piggy bank is all spent. Then tomorrow can get incredibly scary. And I think we move forward in life differently with our internal thoughts. And if our internal thoughts are scared and fear-based, then that's going to shape that day and the things we do in that day. But if you've got money in the bank because you preserved it, you're going to be in a much better financial position to protect that tomorrow, even in case it included a layoff on a job. Money in the bank invites you to make your payment anyway. The lack of And so I love what that person says. And everybody's different. And we're supposed to be different. Could you imagine if everybody did the same thing? There'd be no room on the bus. Somebody's on the train. So I think we're supposed to be individuals, and we're all going to have our own different strategies designing life.
Yeah. What has been some of the strategies when you're utilizing some of these loan programs with your borrowers, specifically here in LA? So it's like, if they do 100% financing, is it because they actually don't have the cash, or is it because they're better utilizing it? They'd rather be in the stock market. Like, how are people playing with their money right now?
I love your great question. I think it's speaking primarily to those who are going to benefit with the assistance. It's designed to actually work. And it's designed to give people a chance. You know what I've learned? The market can't just have just one flavor living in it. Just like ice cream can't just be vanilla only. We need those 32 or more flavors. It matters. So does our market to keep it healthy. So in the FHA 100 strategy, I think you're answering it correctly. I think the home tells us what we're doing. What if you were able to get into the right community, but the house needed some real TLC to it? Well, that home might be better served of you not putting down the down payment, using those dollars to make that house livable for your taste, to get you started. The things you want to do while you're not living in there yet, like floor, interior painting, things that are better without your furniture in there first. Those design ideas, because FHA is only 3.5% down anyway. Still something. Or it could be nothing. You're going to pay more per month when you receive that assistance, right? Because I'm borrowing more money, and the risk profile is different. If you've got money to put down and you don't need to place it anywhere else, we might use traditional lending. I don't know how many people are running around with the thoughts of investing it in the stock market versus into down payment, but I wonder how many people know how to invest it in crypto and other areas of investing that might find a strong return. I'm not really sure, Rick. I've not come across that strategist yet, but I love the you're inviting.
Give it time. It's LA, right? There's some pretty savvy people here, much savvier than me.
You
That's
know
for
what's so
sure.
cool, Rick, is that solution that we're talking about, most of
Mhm.
these things that are solution designed have income restrictions. They have
Mhm.
address restrictions. They have first-time home buyer restrictions.
Right.
This one's sexy for a reason. It doesn't have any of those. No income
Right.
restriction, no address restriction. You just got to qualify to make your on-time monthly payments.
Yeah. Well, it's interesting that you mentioned that the cash can be used towards renovations because one of the big topics right now is cost of construction keeps going up. But more importantly, these homes are getting older. Like I had a client we just closed the other day and it was built in the 90s. And like 90s, that's young, right? Because we have egos. That's totally young. It's like, shit, it's not. It's 30 years old. And if it's not broken, you don't fix it. So that's new roof, new HVAC, even new windows, right? Because the window seals can wear down.
Yes. You know what I've learned, Rick? You know what
Hmm.
I've learned? Buy a home warranty. You usually get one when you close escrow for at least
Right.
a year. Renew it and keep renewing it and upgrade it to the top shelf program. Why? Because they really will replace most of that equipment for you that breaks down. Our family has a total of 3 water heaters, 2 AC units installed, salt water a converter for the pool, all of it with the home warranties that cost us about $650 annually. We have it on
Oh,
all
interesting.
of our homes. And it's a way to own real estate smarter. Why?
Mhm.
Because I might not know a plumber to call. I might not know the electrician. I don't need, who do I know? When your
Mhm.
house is insured, they know the people. And it's all
Right.
warranted at a different level because they're doing it on the insurance's behalf. So you get a friend that helps you to own the house and manage those moments that show up that are really real. But the cool
Mhm.
part is you can budget for it.
Yeah, that's fair. So let's kind of change gears a little bit. One of the challenge, so my hunch over the next 12-ish months is we are going to see some like there's still demand out there, but we still have this big buyer pool of potential buyers who really should sell their homes, but they've locked in these low interest rates,
Great.
right? So they're not really moving, even though they want to move. I call it the lifestyle change, right? But then they need to unlock their home to buy that next home. And it's always been very tricky. And I've done it multiple times. I've been fortunate, but it's not easy doing contingent sales and all that. What have you been seeing on your end?
Well, I love that question. And it's so true, isn't it? I like to think of that moment like the chicken and the egg. I mean, what do I
Very much so.
buy the new house? Do I have a place to actually go to next? Do I sell because that's where the money's coming from? And then if I do sell, now I've got to move, but will I really find something and will they say yes and will I love it? So, boy, that's a real obstacle. And
Mhm.
for years, we've just been, for many of us, we tried to do the I'm going to sell and write an offer with the contingency that I've got to be
Yeah.
able to sell mine to get yours. And in some markets, that can work. In LA's
Right.
market is very rare to see it work. And it's just
Yeah.
competitive here. And so how do you do it? And I've said it a few times already. Why do I love 2025? Because
Right.
it's solutions. And I've been in
Right.
this industry since the 90s. And every now and then you see something really awesome. And I'm the past state president for California's lending industry. That was me in Congress talking on housing reform and quite active at a much higher level. And because of that, well, some people say I don't even think I'm working because there's that much passion to find solutions.
Hmm.
Well, I've been busy out there finding one for that moment specifically, Rick. How do I
Hmm.
get the next house to replace the one I'm in? And then how do I get the money to do it? And so a solution has been crafted. It's called the Phoenix program. I love the name because I love what it's doing. I love what it's inviting. It's inviting us to reset home ownership into everything new, everything fresh. It does so by transporting the equity that's in the current home that we as homeowners own, and it transports it to the new house in the form of the down payment. Exactly what we wanted to do when we sold our home. What makes the Phoenix program amazing, Rick, is that it removes the mortgage payment on the house we're leaving. So once you buy that new house, Rick, once you close escrow that day, the mortgage payments on the old house that we own stop immediately. All the interest stops, all the payments stop, so that all of your money that you earn can focus on the house you're purchasing. It's amazing what's possible inside of lending in 2025. What makes us even more amazing is that they get to work with you, for example, Rick, their realtor, to get the house sold at full market value. They get 6 months. It doesn't take quite that long to sell LA's real estate.
Right.
That much time if you like to. And Rick, that's all the time without any mortgage payments or interest payments on the house you just owned. And when you sell it, you get all of the other money that comes through. It's quite a spectacular way to get to yes, I can at a price and a solution that's amazing, because part of the solution is that they're going to work with the captain of the ship. They're real. They work with you on buying the house that they want to own, and they also work with you, Rick, to sell the house that they currently have to sell next. What makes this so awesome is that they get 30 days to stay in the house that they currently have to slowly move into the new house. The faster they move into their new house, the faster you can work in with your seller to get that thing sale ready. Part of the Phoenix program provides cash for the seller to get the house's maximum purchase price. It's designed to have money available for staging. It gives money to get the house painted, any landscaping done. That way, that when you get your house market ready, you're getting the maximum the market can give you. And when you're staging real estate you're not living in, and you can make it show ready when everybody's ready to schedule their tour, whether it's during the week or the weekend, you've got a much better chance of getting that home sold faster and for more money, because home purchases are emotional purchases. And it's hard to trigger that emotions if we're packing boxes and doing other things and trying to sell our house. And we're willing to live in that moment, but a buyer's not. And so when we move out and allow that house to be sale ready, and we're not pressured with the mortgage payments on that house, well, we're more open as sellers to do what great people like you teach us to do. Get the house sale ready, because I'm not having to pay on that any longer.
So what does it look like in terms of rates and points for a program like that?
I love your question. Remember, the rate is 0. So the interest rate on the mortgage that you currently had, part of this solution is it pays it off in full. So that interest rate is 0. On your purchase loan that just financed the new house, here's what's cool about that. It's traditional lending, whether we're using a Fannie Mae, a Freddie Mac loan, or we're going into a jumbo loan up to $3 million. There are absolutely no additional points. There are no adjustments to cost for the solution on the financing of the house that you're getting. That literally gets to stay permanent financing, available for refinancing in the future if rates were to But
is only owner occupied?
Occupied. Rick,
not investment?
No investments. This
damn.
No. Wouldn't that?
Because you partner that up with a reverse 1031 exchange.
Correct. You're already reading my mind. Not yet. Rick, please. These solutions come out. This is version 1.0. You and I know once things work that well and they get the appetite and more capital, that things expand. These are two banks participating together to create this solution. Bank one is the solution that helps us to exit our house. They're the ones who turn our equity into cash. They're the ones that pay off your existing mortgage. Now they do have costs. There's no interest. Their costs are 2 points for the amount that you're purchasing. It was
which again is still in the big scheme of things cheaper than trying to carry 2 mortgages.
God, most of our interest rates, the cheapest is going to be 2.75.
Right.
6 or 7. It's not going to be 2. And the cost on the 2 is cheaper than your interest rate. So, yes.
That's interesting.
It's delicious. It's the Phoenix program. Literally the biggest game changer I've ever seen to home financing ever in my time. And what I love about it also, Rick, is that it keeps I don't know why real estate can be so emotionalizing sometimes. Even I'm affected emotionally in my real estate transactions. And so what I love is having a professional by my side. What I love about the Phoenix program is that it's the exact same professional that helped us get in the house that also is going to sell the house. It's part of the agreement's requirements that we as the
Oh, interesting.
and so remember I shared with you and what makes this all possible is that when you go to go visit your listing appointment, for example, somebody's going to go have a home to sell with the Phoenix program, you get to go to your listing agreement already in hand with a guaranteed buyer. The bank partner in position one guarantees to buy that house. So on day one of your listing appointment, you can come with a guaranteed buyer. Now, you can use the guaranteed buyer's offer price they present, or you get the 6 months to get the market's highest price. But you, as their agent in this example, Rick, the captain of the ship, the banks don't want to talk to multiple people. That's
Sure.
not clean. This is designed to really work. And so because of that, Rick, the agent that supports the client's successes will even represent the bank if the bank buys the house in 6 months. The agent that manages this is the captain of the ship until that house sells, regardless.
So the bank buys the property, then they what? Do they turn around and sell it? Do they keep it as a rental? Is it just sit empty?
In this story, you're the agent. And so sell it, Rick, until the day you sell it.
Got it. So the bank will buy it, presumably will at a discount versus the open market because they're going to turn around and put it on the market. But the idea is if you're the buyer slash seller, you're making this transition, you just want it off your plate.
Well, no, that's like an open door solution where they're like, pay penny dollar. This is so
Right.
not.
Got it.
This one instead is not that. It's a guarantee to purchase it at a price they're willing to give.
Sure.
You get to sell it, Rick. In an open door, you don't get to sell it. That's just the price.
Right.
We're done. You don't get to do anything in the market. The market's over. And this case whatsoever. And this
Interesting.
we're still selling it. But remember, you get to sell it now with the owner in their new home. Now we get the house for sale completely vacant. We can stage it now. We can get it still ready. And all of the costs that we use to get the solution to become ours are paid for because of the profits made available by selling it correctly versus not selling it that way.
Interesting.
It's really delicious because, you don't have to just get the new. I think of it like a solution that they give us when we get a new car, right? And a lot of us trade in the old car. And of course, they give us less so they can sell it for more. They wouldn't be open tomorrow if that's not how it worked.
Right.
Sometimes they make more than they should. But this is delicious because it's not that. It has an opportunity to be paid for less. However, you get 6 months to work the entire market with you, the captain of. I'm confident there will be a way in that 6-month window that we're not forced to take the cheapest price. Why?
Right.
Because we're not being asked to make monthly payments on it any longer. It doesn't hurt to wait to get the market's best price.
I've noticed that over the last couple of years because of the low interest rates, sellers aren't doing the concessions in terms of price. Like, I'd rather just sit on the market because the money's basically cheap. So I will wait for my price. And if it takes 3 months, 6 months, whatever, they're willing to hold on to it.
It's true. Here's what I've learned. A seller selling in today's market probably is doing it because there's a need. The base seller. Somebody told me once, Scott, it's the D's. And I'm like, what do you mean the D's? It's debt that's getting them to sell the house. It's a divorce. It's somebody passed away. It's deferred maintenance has gotten too strong. There's so many things that relate with the letter D that seem to be sellers of today. So everybody's selling for a reason. What I love about the Phoenix program is it gives us a path to have what we're looking to get next and to be correctly at the price we want to pay without sales contingencies. And we're getting additional 30-year fixed rate mortgage without any prepayment penalties. You were paying the exact same price we would if I did sell the house and I was financing that day, or if I didn't. And that's because there's absolutely no additional fees or costs for the Phoenix solution on the buy side. Not a penny.
Yeah. Interesting. Because I do think that going forward, we're going to start becoming more of a normalized market where we may start seeing more contingent sales. And I've been talking to agents. I'm like, hey, do you have any offers? Have a buyer interested? Like, we've gotten offers, but they've been contingent sales. And my seller's not really open to it. The ones I've noticed where I'm representing the buyer, where I have to sell it, is when the property's been sitting on the market. Where they're like, look, I'm going to give you close to your price. Not always giving them their price, but it's like, but you got to work with me on getting this sold. And that's when I noticed that more sellers have been more like, okay, I'll take the risk. Or like, for example, I had a client buy in Malibu, but I had to sell his house in Simi Valley. And the agent's looking at the Simi Valley house like, yeah, this is going to sell in like a minute. I'm not really concerned. Right. And it ended up working out.
We're working with familiar agents. They know markets. They know the math. Some can make it make sense for their, exactly.
Right. As long as the seller gets what they want, the buyer gets what they want, everyone can move on. It's just a matter of making it more complex.
Exactly.
So let's kind of switch over a little bit to some of the investment stuff that you might have been seeing. I have clients that buy, investment properties here. A lot of them are leaving. It just is what it is. The city of LA is not the easiest to work with now that we have the Just Cause Ordinance bill. So if your property wasn't subject to certain rent control restrictions, it is now. It's like, oh, I'm out. That's what a lot of them are saying. But, when it comes to interest rates, what's always been interesting is like as you mentioned, like the retail side, they are rate sensitive, but they're not as rate sensitive because they can move to different neighborhoods. Okay, I can't afford Hancock Park. I'm going to go to Mid-City. Can't afford Porter Ranch. I'm going to go to Granada Hills. But investors are very rate sensitive because they can't go to another neighborhood because the rents would also be different. Right. So the numbers are very different on how they view things. So I'm curious to see what you've been seeing on the investment side, buying here in Los Angeles.
I absolutely love the question. And it's so that's the gift of what happens when we as consumers hire and work with a real professional of industry, a passionate professional. Why? Because they know how to find the math that works.
Right.
LA. This is the city where everything is possible. And part of that story includes finding a cash-worthy investment property. Are there an abundance of them? No, that's why you need an expert who's passionate on how to find them. Exist. They're called needles and haystacks, but they're absolutely out here. And every property has a story that belongs to its address. And every address and every home is just how we acquire it. I've witnessed a lot of people taking advantage of homes that were either inherited and nobody's even seen it and they're just selling it at a discount because it has a lot of the D, that deferred maintenance. There's a lot of opportunity, and those with the tools of how to do it can go into these opportunity events and repackage these pieces of estates and collect those high rents that LA demands. That's the cool thing about playing landlord in LA. Our rents are not cheap. Not much here is. And it's fun to have that story when you're the owner of what's expensive. And I'm an owner of what's expensive. You don't go out there and own it. So what I love, Rick, and I think a lot of really smart investment, individual-minded folks, well, here's what I love about home ownership. Not only do we get to live in the house we own, build equity, we're able to leverage that equity. Here's what I've done in our family, Rick. I've had my home, for example. I live in LA. I'm right off of Mulholland. I'm in the hills. It's gorgeous. It's lovely. I've had it since '03. I have a wickedly abundant amount of equity in this house. That equity is lazy. Equity has a zero return. I don't know anything like real estate that can grow regardless of whether or not I have a loan on it or I own it 100%. Its value for sale doesn't care. It's unaffected. If I own the house, whatever it sells for versus what I owe becomes cash. But nothing about equity is cash until the day I sold it or leveraged it in the form of a loan. That's why equity on its own has a zero return. But it doesn't have to stay lazy. You in my family, we took out a large home equity line of credit. I love equity lines of credit.
Big fan.
We only pay interest while we're using it. And while we're
Mhm.
not it's sitting there resting, waiting for someday to be invested or never touched at all. And while we're not using it, we're not paying for it. But our family, we were able to accomplish several homes and never paying a dollar out of our checkbook to do it. And
Yeah.
I use the home equity lines of credit checkbook. And I blended the down payment by transporting some of my LA equity to the Palm Springs market. And we ended up getting several houses out there. And it's all still my equity. I'm just
Sure.
putting it to work. I'm transporting it. And now I'm a multi-family, own multi-houses. And yes, you know what I've learned? Allow me. Here's what I've learned. I looked at the math of the houses that I own today. I looked at my purchase price. I looked at my mortgage. And I looked at what the value would be if I sold all of my real estate holdings. I'm in my 50s, but I have enough equity. If I were to convert that to a sale, I could retire today and live off of the investment that my real estate has earned me. That never would have been possible if I didn't do it. And my suggestion is anybody that owns real estate has the right to picture themselves as investors. And what I love is that I don't live in Palm Springs. I'm not in the desert. I live in LA. You can take your investment thoughts into other zip codes. The
Sure.
thoughts work all throughout our nation. And homes in Michigan, for example, you can get for $110,000 and get Section 8 rents that pay you more than your cost ever will be. And Section 8 is guaranteed rent. So there's an investment solution for almost everybody. You just got to meet passionate real estate professionals that will show you how to do it. And then let's begin. We all played Monopoly. The people that bought the little houses won the game. And that's you in life. Buy the houses. They really work. Wealth development happens this way.
Yeah. Well, what I've always told people is like, look, the appreciation is based on the asset, not based on like the loan. So, if a home appreciates at 3%, but your cash on cash might be like 16, 17%.
Well, isn't that?
And then people, people are like, oh.
Isn't that delicious?
so
you only use a little bit, but the value growth is on all of it, even though it's delicious.
So most of the investment clients you've been working with, they're mostly doing like the HELOC method to use that as the down payment and then leveraging the rest.
If they don't
is what it sounds like.
Capital, not all of them. Others are capital, but smart folks are absolutely transporting equity. It's a really smart thing to do. It's 100% financing for investment homes.
Oh, yeah. Don't get me wrong. Like I've told people, it's like, look, people are like, oh, should I just buy properties cash? I'm like, really, real estate only works if you leverage it. Otherwise, it's like you might as well put your money in the stock market. It's less work, 8 to 10% returns. Like leverage is what actually builds it. And then when you're in your 50s, 60s, 70s, 80s, then it's like, cash flow, pay off the mortgages, whatever. But it's like, otherwise, it doesn't really make sense to hold properties without any sort of leverage. And I have one of my mentors, he's in his mid 70s. He's still leveraging.
Well, you should. Why? If you're borrowing money for 7%, but you can take your dollars with a financial investor, financial advisor who knows how to do things they didn't teach us. They know how, and they're getting us a 12%, a 10 or a 9% return, but we only have to pay 7%. And here's what else also, Rick, I don't know what other tool that we can use that gives us tax strategies. It's amazing how much we can write off that relates to mortgage interest. Guess how much credit card interest you can write off? Guess how much other interest in life you can play with and write off? Not much, but mortgages we can. And what's even better is that real estate investment properties invite even more tax strategies. The more houses we own, the more investments we get, the more strategies we play with.
Yeah. Yeah, I always tell people like, oh my gosh, my taxes are so complicated. I'm like, that's because you're doing something right.
Oh, I like that, Rick.
I have a client. He's one of my bigger clients. I've helped him buy a bunch of rental properties. Now we're in the process of selling them. But he's like, I hate getting loans. I hate it. It takes me hours to put together all the paperwork. He's like, it sucks. And I'm like,
it used to, Rick. Oh my God. They used to want everything, the blood type, the whole everything.
Oh yeah, for sure. Like, hey, what's the name of your firstborn? Let's just put the value of that kidney, and we'll go from there. But
What I
now
love
there's,
about investments, Rick, you know
what's
what's
that?
so super cool about investment real estate financing? Okay. The banks have one master question. Will you pay me back? But when
Mhm.
we're homeowners buying investment properties, we get access to a different way of answering that particular question. When we're buying investment properties as homeowners, we can
Mhm.
allow the building to answer the question. So
Right.
the bank's still going to ask the question of, will you pay me back? You and I, as consumers, are so used to them asking us. Well, not anymore. You
Right.
go sit over there for a minute, Mr. or Mrs. Consumer. I'm going to ask the building you're looking at, will you pay me back? And so when we're buying investment properties, you could actually, oddly enough, be unemployed and still go and buy yourself an investment property. You could be
Mhm.
retired. You could have just started
Right.
your brand new self employment job a month ago. And the reason for this is that the bank's not asking you, consumer, will you pay me back? If the rents from the building you're purchasing are strong enough to pay the mortgage payment along with taxes, all the insurances, everything on the loan application pertaining to employment and your personal income, you're simply going to leave it blank. The bank doesn't care what your answer is. The building already answered the question it had to ask. That only happens on investment purchases. It's much easier to get to yes, you can when the building can support. And why would we ever buy real estate if it didn't make mathematical sense? So the
Right.
likelihood of us buying an investment property that has the ability to support costs, very strong.
Mhm.
Otherwise, I bet we're buying it because it needs remodeling. And when we're done, it will cover the cost. There's
Right.
nothing in the story of investing in that one that says it's going to really be profitable. Otherwise,
Mhm.
it's not going to be a great investment, and you're not going to get great people to join you on that ride anyway. So, as long as it
Right.
pencils out, your employment and your personal income do not matter.
You brought up something interesting about insurance. That's been like the buzzword over the last 2 months because of the fires and all that. Like, I'm buying a property currently out of state, and I budgeted like $1,500 a year in insurance, which was like double what I'm paying insurance on another property I own in a similar area. And now I'm getting quotes of like three, four, five, like as much as 8 grand. And that's out of state. So I'm curious because that's going to affect someone's DTI, their debt to income ratio. It's going to affect all sorts of things. What have you been seeing over the last, even just 30 days?
You ask gorgeous questions.
I
And,
try.
and Rick, please, it's true, isn't it? And I don't think that the just because it happened in LA that there's going to only be LA that's going to pay for it. No, it isn't. We're all gonna,
No, they got to make their money somewhere.
nothing's for free, and we got to
No.
fix it. So everybody, we're all going to pay wherever our zip code is. It doesn't matter.
Right.
So please, I said it earlier, and I'll come back to it. Life has a pro and a con, and
Mhm.
that's a con. Insurances are more expensive, and I doubt they get cheaper. I think this is
Right.
the new normal, and it's
Hmm.
much more than what we remember just before. This is really true for those in California and Florida. So
Right.
our insurance is spiked more than most. My
Hmm.
personal insurance, Rick, here where I live, I'm in the Hollywood Hills. We're
Oh,
in what we
sure.
call a high fire zone. Of course, we are. That's one of why we live here. It's so pretty. Uh,
Right.
the flip side is that I was with farmers since I bought it here in '03. And just a couple
Hmm.
of years ago, when all of these big insurance changes began, farmers decided they weren't renewing any of the policies over here. And our insurance went up to an incredible number. We were over $16,000 annually to insure our home for a
Wow.
year after that change happened. Luckily, we've been able to bring that down. I think we're at about 12,000. Oh, tickling 13. We brought it down, but
Okay.
about $4,500 a year. It was much less
Yeah.
yours. And that story is everybody's got their version of that.
I wonder if that's going to force people to sell.
Wow. Yeah, because you know what?
Be-
If you go in the house free and clear, you're going to have insurance. Well, you should. Not everybody
Right.
learned in these fires. So,
But there's so many of these neighborhoods where people have lived there forever, and they might have been like quote unquote blue collar workers because it just wasn't a hot spot. And now they can't afford that insurance.
I thought the same thing. I thought it when it happened to us. Rick, that I can pay for it. But what about the folks that aren't? I'm in my late 50s. I'm not retired yet, but a day's coming. And those families are living in my neighborhood as well. I thought the same thing, Rick. How can they afford? This is a drastic jump. It wasn't soft. It's dramatic.
Right.
Don't know the right answer to that, Rick.
Yeah.
You know, I think that's why, Rick, please, as we age forward in life and we have an abundance of equity, this is another reason why owning real estate is so valuable. We could probably do a several-hour podcast about why one should do it. Another reason of why is our retirement. Later in life, this is proof that just insurance, something that you and I can't control, but we have to have it, can rise at dramatic levels, not soft, even eggs.
Right.
I mean, things can jump drastic and when overnight, when you didn't plan to have that happen for you. So there's loans that happen when we're 59 and a half and older, and others at 62 older. They allow us to tap into our equity differently to supplement retirement. Well, you can't do that if you've been renting, and you've been renting for so long because your rent was cheaper and you said, why would I own my house? It cost me $1,500 more. Why? Because later in life, when you retire, you might be able to get $5,000, $4,000 a month out of that thing for the rest of your life to supplement your retirement. But if you took the cheap rent route, you get nothing. You get you stuck in your 401k, and that's it. Hope you did.
Yeah.
Hope it's doing well.
That's fingers crossed.
It is the truth. I mean, honestly.
Yeah.
And most of us
I'm genuinely nervous. Like, you know, I've talked to some people and, you know, and you're in your 30s, let's say. I'm like, you do know you're already halfway through your working life. And they're like, wait, what? I'm like, you graduate at 22. The goal is generally to retire at 62. It's not that long. And I actually had one of my clients, he was an eye surgeon. He's the one who taught me that because he took a job in Fresno. And I'm like, why are you moving to Fresno? It's Fresno from LA. He's like, they need eye surgeons. They're offering me triple my pay. So it's like, he's like, I'm a surgeon. You know, we don't get out of medical school till we're in our 30s. Your hand starts to shake on these surgeries over years, just by virtue of being so hyper focused that you actually don't have a long career in this. So he's like, I need to make the most amount of money in the shortest amount of time. And I'm like, damn.
Wow, I never thought of all of that.
Yeah, neither did I. I don't go into the hospital that often. It's just like,
no, exactly. You ready for this? I was just laughing the other day. And here we are visiting. I'm 58, and I was looking at math, and I was visiting with somebody who was almost 70, and I'm like, uh-oh. I'm only 12 years away from 70? Wow. What's going on?
Yeah.
The ride
it flies by.
The ride is fast, and home ownership can happen even if we hadn't done it yet. When was the best time to buy a house? Yesterday. You know, the next best time is when somebody says yes. I think that every day forward, we've got a real big issue when it comes to homes and it comes to places where people need to live. Our population growth, those folks that are in their 30s, that are moving up on that ladder of their 30s, they're ready for their home. Family development thoughts start happening. Then average first-time home buyer nationally was 33. It's now 30.
Saw that.
People are coming up right now and for 6 years forward at massive levels. The biggest population growth, bigger than the baby boomers, is that generation. And they're hitting that market right now and for years forward at very high levels. It is not possible for us as a nation to build enough homes to catch up from how far behind we are to the amount of folks that are entering the purchase playground. We don't have enough inventory, nor will we. Everything in business and life is supply and demand. Every market has shifts, but I have more people needing houses, whether they're going to rent the house or they're going to try to own the house. The story didn't change. We don't have enough to go around. It's why California allows ADUs, regardless of your address. If you have the space, you can build it. Why? Because we have a massive shortage of available housing, whether to rent or to own. So owning real estate is a brilliant idea when somebody said, yes, you can. Why? Because tomorrow's coming. I hope I'm here for it. And if I am, build equity. Why? Because I don't have enough houses for the amount of population. In '07, '08, where we had the beginning of the massive collapse, a lot of ingredients were part of that. One of the ingredients relates to supply and demand. We had an oversupply of zealous builders building projects everywhere because buyers, before the dirt was dug, was buying the real estate.
Yeah.
We had a massive change of population growth. If the home buyer's 33 and you go back 33 years from '07, '08, 9, 10, you and I here in America saw America's biggest decrease in population, the very largest, and it was massive, the biggest ever. And what happened? Roe versus Wade. So abortions became legal. We had a much smaller, and we had a lot of human rights. A lot of change was going on in the 70s. And you look at that window of time and you look at the population at that window and you can easily match it. And you look at the population growth right now of the 30s and where we're heading. And then you look at the housing that's out there, whether it's built or we're so far behind. So very far.
Yeah. And it's just, and in California, and I've talked about this before, it's too expensive to build affordable housing. You know, now you have to have solar panels. Like, great. Well, you just tacked on $20,000 to $30,000 on the build, and buyers aren't paying $20,000 to $30,000 more for solar panels. I mean, in my experience, I have yet to have a buyer pay a premium for solar panels. They just don't care. And like, I had one, I was talking to someone who's like, really? No one's paying a premium? And we were in escrow on a property for like $3.2 million. I'm like, do you think someone who could pay $3.2 million really cares about his utility bills? And he's like, that's a good point. He's like,
really true, Rick. That's a great point. I don't want to ugly my house for that.
Right.
Not their thought. They're not in a rush to save a few dollars on the utility bill. No,
right,
Rick. Plus, there's not much raw land here to build. But if I speak about supply and demand, Rick, LA's a whole different animal. For those listening to us right now, and this is the key to the cities of the angels, you know what? Participate. Why? We have over 12,000 families displaced from the fires.
Right.
Biggest devastation in America's history took place, and not in Fresno. It happened here, our city.
Yeah.
We don't have enough buildings to build to catch up with the people we had to. Now we have to go rebuild those houses, and it's not going to be the massive builders. It's not Toll Brothers. It's not the big. They build track housing. They're not coming to fix our problem. It's going to be the small and medium developers that come and fill and build your houses back and build our housing back. And I don't know where they're all coming from. None of them were designed to be this much need for this much house devastation, but we have it. And so we replace what was already there. And that's not speaking to the new development we still have to do. So how does LA have the chance to ever get caught up anytime soon? And that's why you listening literally pay attention. Get out of your rental, get into a house. Which one? The one they said yes to. Why? Because LA's development and equity development is going to explode. Why? We don't have enough. We just don't. So go. Which one? The one they literally said yes to. Who's they? The bank and the seller. And you start there. It's always just the first one. And that happens when you own. And now's a good chance to try.
For sure, for sure. Well, Scott, thank you so much for coming on. I really appreciate it. How can people get a hold of you?
Well, you know what I've learned? It was the late 90s and LA Cellular. For those of us who've been in LA for a while, you remember LA Cellular. I called them one day and I said, could I have a funny number? What about 818-20-SCOTT? 818-20-SCOTT was made available. And I've ever since. And I've learned it's easy to remember things when they're as easy as 818-20-SCOTT. And that's how. 818-20scott.com, 818-20-SCOTT on your phone. It doesn't matter. Even a smoke signal, I bet we'll find each other.
Not right now. Too soon. Just... All right. Well, thank you again for coming on. Thank you, everyone, for listening or watching. I really appreciate it. We got some great tidbits here, and I look forward to talking to you guys next week.
Thanks so much.
Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.